Hey everybody, welcome to Trading Capital's daily analysis video. I'm your head market analyst here, Curtis Scouten, jumping into the charts on this September 1st, the start of quarter four, and what a tremendous price action day. If you're a swing trader or day trader, these are the days that we live for. Opportunities everywhere, volatility is immense. And if this is any indication as to how quarter four is going to be continuing, it's certainly we should be expecting lots of volatility. Volatility is typically defined as only one rate volatility to the downside, but volatility can also be to the upside. So keep that in mind. Volatility occurs in both the upside and the downside, and this is what we thrive in as swing and day traders. So we're going to touch base on the S&P 500, the Nasdaq. Obviously, the US dollar is a hot talking point. That's one of the main reasons as to why the markets are continuing to see weakness. But if we look at the daily chart on the S&P 500, a beautiful 1, 2, 3, 4, 5 days of sell side action, and the markets are trying to rally green. They were positive by filling this gap up here. So if you can see on the daily chart, you came up to test this gap fill and you filled that gap and you've slightly pushed back off of that. Now, it's going to have to coincide with the overall US dollar continuing to fall and the yield starting to soften. I do think we're at that point where we can potentially see a small rally in the market, hence the reason why we covered many of our shorts. Beautiful job covering 6 winning swing trades today. An epic profitable day in our swing trades. So that is a tremendous amount of profits that we banked today in our swing trading accounts. So as the markets are into support, we like to cover our shorts. As the markets are into support, we like to buy and accumulate long positions. So discussing the S&P, you can see that we clearly filled this key technical gap down here, and you actually pierced it. And one of the reasons it's interesting that you pierced this gap is you wanted to fulfill this trend line connecting this pivot to this pivot to this pivot, and look at that technical bounce off of that support level, coinciding with the fact that you have this upsloping trend line, as well as this pivot over here, as well as these pivot tops over here, and you're in an oversold condition, completed this bear flag move to the downside. It does seem that the markets can at least try to attempt a rally back to the 50-day moving average, which would put you about just over 4,000 on the SPX. If we look at the intraday action, it was really impressive. You know, the fact that we gapped lower this morning, made a new low, started to rally and consolidate, pretty much did that double bottom test, and then you've started to rally, and this rally has coincided with the US dollar. So let's take a look at the DXY, shall we? The DXY, look at this intraday surge in the dollar. This is the 10-minute chart. So clearly, let's just see where we opened today on the US dollar. So your opening was right around here, where you had this massive move up, consolidation. You basically came down to fill this gap, and then it was on. The US dollar surged and surged and surged, which caused a tremendous amount of selling in equities and put pressure on the overall market. The fact that the US dollar has surged this high is pretty impressive, I might say. The fact that we're now almost hit that 110 mark on the US dollar, I do think that we should start to pull back maybe to the low end of this range, 108, which should allow equities to bounce from their oversold condition. So that's kind of my thesis. What I'm looking for today is, are we going to hold this close above this level, above this reversal signal over here? Now, we did say that this reversal signal was not as powerful as this reversal signal, so we were in the camp that we were going to likely see more upside in the dollar, which is why we were so short the market. If you were long the market heading into this rip-roaring rally, bullish consolidation on the dollar, that is just, asking for trouble. But overall, I do expect this dollar to maybe close above this high and then look for a pullback before it tests this 110.40 level. That's kind of my whole analysis. I think we've got the breakout. I don't think we're going to get confirmation tomorrow. Yet again, I could be wrong. We could get another soaring dollar, which would obviously cause equities to sell off even more. But I do think in the short term, the US dollar is overbought again. It has kind of broken out of this bull flag pattern. It does need to confirm tomorrow. If it doesn't confirm tomorrow, then I think we trade back to the low end of this range around 108, 107.60. So and that would be a substantial amount for the markets to rally. Since the dollar rallied substantially, it put tons and tons of pressure on gold. We accumulated more GLD at the lows here today. You're on this beautiful surge to a low into almost this double bottom territory or triple bottom over here. You have this pivot to this pivot to this pivot. So again, gold is oversold. It's going to only rally if the dollar starts to pull back. Let's take a look at silver because we were active in the silver space. We added more to our SLV. We added more to our Pan American Silver. So we're starting to accumulate slowly. Look at this beautiful symmetric move. You take this high to this low and then this high to this low. It's pretty much a near symmetrical move, which means you've completed the measured move in this bear flag pattern. You're at long-term support now on an oversold condition. So tons and tons of support on silver. And again, you may get one more little flush down to this orange line around 1717, but these are the levels where I have no problem accumulating silver and silver miners. And the thing about silver miners, typically you see the silver miners lead. We haven't really been seeing that yet, but I do think that with oil starting to collapse, one of the biggest input costs for mining companies is their their energy consumption. So as oil has seen in the last 3 trading sessions basically a 12% drop, that is a substantial amount of extra margin profit that the miners can start to use as maneuverability and wiggle. So as energy costs continue to fall, I do expect that the input costs will decline for miners, which should allow them to be slightly more profitable over the short and longer term, over the short and medium term. If we take a look at natural gas is kind of just up slightly 0.5%, still holding this consolidation, but you're on a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days of consolidation. In my mind, it has to make a move soon. If it doesn't cause a breakout soon, then this is likely going to start rolling over. And I still am in the camp that we start seeing that rollover sooner rather than later, as there's distribution signals still happening at these levels. The monthly chart does give us the best indication that this reversal candle is still technically intact. So I'm respecting that at this point in time. If we take a look at the SMH, so the semiconductors, they've been under immense pressure. Let me flip to Nvidia. Nvidia is the one that has now been hit with harsh regulations from the US government regarding sending their superior chips to China. So look at this move in Nvidia from 179 all the way down to 132. That is an impeccable sell-off to the downside, and that's never healthy for these types of companies. But you're approaching these support levels. You have a major pivot zone over here and lots of chop, multi-month to years of consolidation before breaking out. So lots of support on Nvidia, which is why I'm expecting these markets to continue to bounce. But again, if the jobs number comes in better than expected, we could see a little bit of a sell-off in the markets due to the fact that the central banks will likely have to be more hawkish to try to tackle and get inflation under control. Let's take a look at Bitcoin, BTC USD. So Bitcoin, again, just holding that 2017 pivot high, this yellow line, and it is still forming that bearish flag pattern. So ultimately, if you get a few more days of consolidation, look for this to break down and likely head to this low pivot over here. So that's a 17,000. That's to about 17,600. That's about a 10% drop on Bitcoin. Again, a wonderful job on our profits today. We banked a substantial amount of winners. It was 6 winners on the day. So just congratulations. We covered our ISRG for just over 11%. Covered our Microsoft short, our ALB, our Copart, our KKR, our Amazon. So we banked and banked and banked profits. And I mean, just look at this Amazon, where we covered our Amazon short. Boom, right on this red line, right before the technical gap fill as the markets were extending. You look at this reversal signal right off of that level. So truly, truly impeccable job. We are holding a couple day trades overnight, so hopefully those will pan out for us over the coming days. I do think we're at substantial critical technical levels, and they do have the more likely upside bias over the next coming sessions. Let's take a look at so Apple is having a technical bounce right off of pretty much our short level. I was actually going to cover it, but I'm wanting to keep Apple on there just because I still think their valuation is just utterly ridiculous for the global state of affairs, and they will be impacted once the global recession hits basically Europe and Japan. But overall, Apple is obviously one of the leading and most technical stocks, one of the most institutional stocks. So it's interesting to see that you have bounced off of this level and holding the 50-day daily moving average. But considering this harsh sell-off in the markets from 176 down to 154, it's only natural that you do see some sort of a technical bounce, maybe back up to the 200-day moving average before getting rejected and starting the next leg down. So let me be clear. Short term, I'm slightly bullish. I think the markets can sustain a bounce, and however, the medium and long term, these markets are going to head lower. And it's really going to depend on what the dollar does. I'm hoping that we don't get confirmation of the breakout in the dollar tomorrow, because if we don't get that confirmation, the algorithms on Wall Street will switch and start buying equities instead of selling them. If we get a confirmation candle tomorrow, then it's most likely the selling and the downside will start to commence sharply, just due to algorithmic trading and basically technical breakout signals. So overall, it was a pretty fantastic day for us. We're holding our Octa short. Let's take a look at Octa. Octa's just been demolished. So if we take a look at the intraday action on Octa, we did actually come up to our area. We could have taken profits on Octa, but I'm willing to hold this because it is a quality company. It is it's completely oversold. I mean, we were down, I think, 35% on the day, 36% on the day. We have had a slight rally off of the lows, but I want to definitely see more for this. I think we can naturally get a retrace to the 66 and even potentially the $70 mark before this will start to run into some massive resistance. So I'm holding that one overnight. We are in the money on our AMBA as well, our Ambarella. That one's kind of 2 days that we've been holding it. So we're slightly in the money right here at 62.88. We have a fairly big position, but another one. I think we can at least get back to this gap fill, which would net us on a day trade a beautiful, 7.7%. So this is bullish consolidation. Obviously, it's going to have to take a rally in the overall semiconductor space, but I do think we can get that sooner rather than later. If we take a look at the US 10-year yield, it was on the surge again today, which is hence why the reason why the dollar was surging. So again, we were calling for this US dollar or the US 10-year to potentially have a breakout, but now you are an extended move. You have hit some resistance here, a key pivotal sell-off zone, and it'll just be, you can clearly see by this zone over here, it's acting as a tremendous technical resistance. You've hit that level, pulled off slightly. The question is, how much more do yields have in the tank? It's really going to depend on that jobs number and whether or not the central bank and the bond market will view the Fed as continuing to be extra hawkish. So I think in the short term, yields are a little overdone. Where I see a pullback to, let me just erase these lines. Where I see a pullback to is right in around this area over here. So I think we can pull back to the 3.1% mark, which would lower the dollar and give that equities a little bit of a short-term bounce relief period before starting potentially the next down leg. But again, this is all speculation. The jobs number can really go any way. If we have that Goldilocks number, markets will rally. If the jobs number is too strong, markets will sell off. If the job number is too weak, markets will also probably sell off. A lot of people think that if the jobs number is weak, the Fed will cause them to pivot, but I think we have to have more than 1 month of jobs numbers in terms of negative jobs numbers before the Fed will likely consider even pivoting. So I think we're going to have to see a trend of bad jobs numbers in and around the 3 to 6 months of bad job numbers before we can seriously consider the Fed pivoting. Overall, that's it for today's analysis. Hope all this analysis helps. Please give this video a big like down below. But once again, we continue to bank profits in 2022. The fact that this is Q4 just started today and we already closed 6 winning swing trades is just awesome. I am ecstatic. I'm over the moon. And once again, our technicals are superseding any form of analysis that people on Main Street or Wall Street are trying to preach. And the proof is in the pudding here, people. We have banked so many winners this year, another 6 today. Let's continue to stay humble, respect these markets. They don't go down in a straight line, despite us likely heading much lower in the short or the medium and long term. I do think that in the short terms, there are tradable bounces in which we can play as technical traders. So congrats. Please give this video a big like down below.